Dirty dealings, corporate battles, consumer woes. This is Evening 5. Genting and Genting Malaysia are being swapped out for Gamuda and 99 Speedmart retail holdings in the FBM KLCI, following a review of the benchmark index. The constituent changes to the 30 stock index were announced today by FTSE Russell and Bursa Malaysia, confirming a report by The Edge earlier today. At the close, Genting shares stood at RM3.57, down 1.4%, trimming its market value to 13.84 billion ringgit. It will be added to the FBM KLCI reserve list, comprising the 5 largest non-constituents by market value, along with AMMB Holdings, Malaysia Airports, United Plantations and Westports Holdings. Genting Malaysia ended unchanged at RM2.12 for a market value of 12.02 billion ringgit. Both Genting stocks will feature in the FBM KLCI Mid-70 Index, along with Genting Plantations. Meanwhile, Gamuda fell at the close by 0.87% to RM9.12 for a market value of 25.74 billion ringgit. Shares of 99 Speedmart ended 2.5% higher at RM2.51, valuing it at 21.08 billion ringgit. All changes take effect on December 23rd. The next review will take place in June 2025. FashionValet co-founders Datuk Fazarudin Shah Anwar and Datin Vivi Sofinas Yusof pleaded not guilty to a charge of criminal breach of trust involving 8 million ringgit of funds from Khazanah National and Asset Manager PNB. The charge was read out before Judge Rosli Ahmad at the Kuala Lumpur Sessions Court today. The couple is accused of committing the offence by transferring the sum from FashionValet's account to 30 Maple, operator of luxury headscarf brand Duck, without the approval of the company's board of directors. The offence was allegedly committed in August 2018 when Vivi and Fazarudin were still owners of 30 Maple. FashionValet is currently the company's sole shareholder after acquiring it from the couple on December 31st, 2018. The charge was framed under Section 409 of the Penal Code, which carries a jail sentence of between 2 and 20 years with whipping and potentially a fine. The judge set bail at 100,000 ringgit each, impounded their passports, and ordered the duo to report to the MACC every month. The Royal Commission of Inquiry into Batu Puteh has recommended a criminal investigation against former Prime Minister Tun Dr. Mahathir Mohamad. This was among the RCI's recommendations in its 271-page declassified report tabled earlier today. The commission, chaired by Tun Muhammad Raus Sharif, looked into the International Court of Justice's May 2008 decision in the Malaysia-Singapore sovereignty case over the disputed islets. This includes Putrajaya's move to drop its applications for a review and interpretation of the decision a decade later in 2018 under the then Mahathir-led government. The RCI report concluded that the then PM may have deliberately induced the cabinet to not proceed with both applications, a decision it said was incorrect and untenable. The Commission is recommending that a police report be made by its secretary to enable a criminal probe to be initiated against Mahathir for offences under Section 415B and Section 418 of the Penal Code. The offences carry jail terms of up to 7 years, a fine, or both. Fertiliser firm Cropmate jumped on its ACE market debut after its initial public offering raised some 42 million ringgit, mainly for its operations and expansion plans. It opened at 24.5 sen, a 22.5% or 4.5 cent premium to its IPO price of 20 sen, before settling at 21 sen. Selangor-based Cropmate is mainly involved in the formulation and blending of conventional and specialty fertilisers, as well as trading of straight fertilisers. Looking ahead, Cropmate is optimistic about its prospects with China's growing appetite for durian, coupled with an anticipated rebound in fertiliser average selling prices. Citing a research report from HSBC, Cropmate Sales and Technical Director Leong Fo Siong said China's appetite for durian has increased global demand by 400%. He sees this as a key growth driver for the group's specialty fertiliser business catering to local durian orchards. Leong also pointed to an expected rebound in average selling prices of fertilisers as early as the first quarter of 2025 as another growth factor next year. He said the prices have normalised and bottomed out at around 1,400 ringgit per metric tonne. The government is proposing to separate the roles of the chairman of the MCMC and its newly established position of CEO, as well as to transfer the regulator's administrative responsibilities and powers to the latter. Communications Minister Fahmi Fadzil tabled the MCMC Amendment Bill 2024 on Monday to facilitate this transition. One of the proposed amendments outlined the appointment of MCMC's CEO by the minister based on the Commission's recommendation. The CEO will serve as a Commission employee, cannot be a member of any legislature, and will hold a 3-year term with the possibility of reappointment. Responsibilities include administering and managing the Commission's functions and operations. The amendment would also remove the executive powers and responsibilities of the chairman. Another proposed amendment states that until a CEO is appointed, the chairman will retain all CEO responsibilities, which will be transferred upon the appointment of the Commission's top official. Existing Commission members will continue serving until their terms expire, unaffected by the amendments. This amendment bill is expected to be debated and approved by the lower house next week.